dois me réveiller, y'a lundi matin. Quand je dois me réveiller, y'a lundi quand je dois me réveiller, lundi matin. Quand je dois me réveiller, lundi matin. Quand je dois me réveiller, lundi matin. Quand je dois me réveiller, la guerre contre l'alarme, j'ai pas envie d'ouvrir les yeux. Je sais pas quoi faire, je sais pas quoi faire, je sais pas quoi faire.
What's going on, guys? Happy Tuesday. It's just after 11 a.m. New York time. Thank you for having patience with me because I know I rarely stream. And I said I was going to put a stream out last night. And then last minute I decided I was going to do pre-recorded content. And I was talking to the guys that edit my videos who do a fantastic job. And we're just talking about the turnaround time. And putting out a video every night and doing a short video is good if you could get it around and posted quickly. Otherwise certain things can expire. So I actually decided that I'll do those short form videos. I'll probably do more of those short form videos, get back on that, producing content. As cringe as that sounds, I swear, like, you could have all the hobbies in the world, but there's just something about, I think at least for me, there's something about talking about markets that I just can't get away from, even when I have no reason to really necessarily trade too much. So short form videos, but I'll post basically the raw version, and then I'll post the raw version, and then I will have an edited version posted. So give me a mic check. There is, what I actually I did notice, because I was doing a test on the mic, and there is a really subtle buzz. I can pick it up whenever you're listening to the live stream, and then I think what happens is when it's uploaded to YouTube, or when I give it to my editors, it's for some reason I don't hear it on like the finalized content. So I'm sorry about that. I've yet to figure out what the cause of that is. I can't tell if it's, so I have a lot of I have a pretty good wire situation, but I do have a couple audio cables that maybe they're crossed. Maybe there's some kind of, I don't know, electrical interference. I'm super LARPing right now because it's wild strong right now. Let me just double check something. Because I don't know anything about audio. Down mix to mono, super. Let's see. So the buzz is wild strong right now. Is it that strong? Hold on one sec. Let me check something. All right, did that improve at all? Grounded wires. I don't know what that means. Other than grounded electrical wires, but as far as like it ain't that bad. Okay. What's up, Asgard? All right, so yeah, I'll have to figure that out, but I can't make any promises. But anyway, so yeah, putting out those short form videos would be good. I'm gonna put out the raw version first, though. I swear, I think I just don't like, I'm live streaming right now, but I think I don't like live streaming for some reason. Like sometimes I want to keep it under an hour, and then it goes to an hour and a half, and then I'm talking at my computer for an hour and a half straight. I'm mostly riffing when I'm streaming, so that's a problem too. I should probably put together some points and make these things a bit more organized, especially if my goal is to put out more content. But I do like doing content. Like, it's a weird thing. Like, I hate it, I love it. Again, I have, it's not like, listen, made money in the market, don't need to trade. I have things that I love to do outside of the market. I have my daughter that I spend all my time with, my wife, obviously, jiu-jitsu, gym. I do all those, and I'm still left. I'm just the kind of person who really needs to be busy. Like, the worst day of my week is actually, it's Sundays. Like, I don't have anything to do on a Sunday but relax, and that is when my mind just starts to go haywire. Anyhow, sorry for that long rant in the beginning. So gonna keep this simple. Really quickly, I had something that I wanted to touch on. There are a bunch of fake Linktree links now being shared in the comment section under my posts. So you guys know what my Linktree is. It's where the book list is located. It's where, any current bonuses from ref links. Yes, these are ref links. You guys know that I've shared the Woo ref link a bunch recently. What I've been doing is taking any funds from that Woo ref link and donating them directly to charity. It's not really generating anything. So it's not like these are, printing by any means, but there are fake lists that are being shared. So it's a fake Linktree that's being shared. The real one is obviously it's in my header on my page, but if you look under in the comment section on my posts, you'll see people posting some version of this. And the problem is, it's not that you're getting deals for exchanges or anything like that. The problem is that it's actually, it's like fake Telegram groups and fake Discord groups and the like. So I don't want you guys to get scammed. That would be terrible. So the only real link is the one that is under my header. And I rarely post this thing on Twitter. You'll never really see me sharing my Linktree. Some people share their Linktree every other day. So anyhow, so we're going to talk about, excuse me, drinking out of my water bottle and went down the wrong pipe. We're going to talk about Bitcoin. We're going to talk about ETH. We're going to talk about Solana. We'll talk about alts briefly. We'll talk about some current events, some current catalyst things that obviously have been, they've been important to the market. I'm talking specifically about the German government selling, which is, I think, more or less, we're almost, I think, halfway done. We have CPI coming up this week. I think that is going to be, obviously, that'll be something that should offer at least some brief volatility. And then we have the ETH ETF approval. S1s were all released, updated S1s yesterday, or I think we're going on about maybe just under 24 hours. So we did see a brief ETH response to that, obviously talking about the ETH ETFs, and that is now across the board by everybody. So that's good. When I talk about Solana, I'll touch on meme coins. I'll touch on WIF. Again, touch on meme coins briefly because there is a relationship between Solana performance and Solana meme coin sector performance, or just meme coin sector performance in general. Most of the activities, obviously, it's been on Solana. But then I think there's something important that's worth talking about now that's a recent update, and that's with regard to the Solana ETF, which I think is not something that we're going to see in the short term, but I think it is inevitable. And we're talking specifically about the date, that the final date for that lines up really nicely with a major Solana unlock. So just quickly, this market has a way of helping people offload at more favorable prices. In particular, larger people, larger entities, specifically whales. So, I don't use that word as much as other people do because, most people will attribute everything to whales and some kind of cabal and, secret invisible hand that, controls the market, which to some degree is true, but I think that is quite significant now, especially if you are bullish on Solana or if you're not bullish on Solana. So yeah, we'll get right into it. Something worth pointing out, this post that I shared this morning. So just a reminder, this is kind of like a don't lose the plot reminder, because this stream, it might start off kind of on the negative side of things. I think some important details that are worth keeping in mind and worth prioritizing. Obviously, these things can change. There's no rule that says that markets need to do, X because of Y. But there are some significant contextual shifts that I think have occurred that at least imply they're going to be a little bit longer of a breathing period, or a breather at least, before we're looking at any kind of, crazy conditions again. So that it might not sound very bullish, but I don't want you guys to lose the plot, because I think that I've kind of alluded to this countless times. Most of my content, honestly, now, if you want to hear me talk about the market every single week on Thursdays on SyncQuote, SyncQuote Spaces, you guys know I'm part of SyncQuote, it's the best decentralized options exchange. Most of my thoughts on the market are in that Spaces. So it's about an hour long. It's 1 p.m. Eastern Standard Time on Thursdays. Come in, Buddy Asgard comes in, talks with us. But I think the important detail I wanted to touch on was I consider that Bitcoin having an ETF now means that it's going to trade a little bit more independently of the entire crypto market. And that's because it now has possibly, opened up to a different type of buyer, a more passive, a more patient, a more accretive type of flow that you don't see in crypto markets. and in particular, talking about adding the ETF to long-term portfolios, retirement accounts. I just think it's going to change market structure to some degree, to some measurable degree. And, market structure, not only meaning what most people consider in terms of market structure, which is what the chart looks like, but market structure in terms of the composition of people trading on a day-to-day, or not even trading, but just the holder base, for example, as well as, liquidity, as well as, what we expect of maybe daily ranges moving forward, so on and so forth. So don't lose the plot. That's kind of what I'm saying early on, because I don't want what I talk about when I get into Bitcoin and ETH to sound bearish, because it could, maybe to the untrained ear, at least at the beginning. So a reminder that if you're someone who trades both ways, don't lose sight of the 6-month plus outlook with Bitcoin. BlackRock's IBIT is seeing large inflows at these levels. So my theory has been that the ETF buyers are a different type of participant. They haven't really been through the gauntlet in terms of experiencing real crypto volatility. If there's someone who waited for the ETF to arrive to participate in this market, and they haven't been on our side of things in this market, on centralized exchanges, on DEXs, trading day to day, or just being part of the crypto holder base, they probably don't have the same patterns of behavior sort of instilled into them or impressed upon them, and therefore they don't really know how this market behaves as much as maybe you or I do, and how reflexive things can get. So I think they might be a little bit more, possibly a little bit more diamond-handed. They have a longer-term view. BDB also references this. This is someone who I used to kind of clown on in the past, because he obviously has ridiculous antics, but there's a lot of times when he does post really, cogent and coherent things in between his sort of what seems to be mostly like shit posts. But there's a lot of people that are really bright that shit post all day. And then they'll post something that really shows you that they're, they're relatively in tune with the market. But, boomers have been buying ETF. They've been taught to hold and buy dips throughout decades. Stock indices going up only. People reference the S&P chart, the NASDAQ chart, like it's something that they reference it like it's been up only, but they also don't understand why. And it's basically, you think about it, it's like an actively managed survivorship fund, right? If you're a company that's not performing well, you get pulled out. Any companies that are performing really well and satisfy the criteria get put in. And obviously, something like that is going to reflect success, and it's going to be upward sloping. And there's a lot of reasons why markets have positive drift overall, or rather the indices do. So the idea that maybe the holder base of the crypto, Bitcoin ETF is different, I do think that kind of feeds into this. Now, it doesn't mean they won't sell. It just might mean that it takes a little bit more for them to sell. These people will probably put in the bottoms as well, the way that they sell the bottom of the stock market too. But just, a theory that I've been kind of leaning on for a little bit, because obviously it suits my bias long term. But they have been buying down here, 187 million from BlackRock. So that's worth pointing out, right? It doesn't mean that can't change. It doesn't mean that that's even, completely factual, but it's just my sort of idea of how they behave relative to how we behave. How we behave, we know that when shit hits the fan, get out early, get out fast. That's kind of something that self-reinforces the volatility we see in this market, and sort of the reflexive moves to the downside and to the upside. So let's get into another thing that is obviously worth pointing out, and that's what's been talked about the last couple of weeks now, is the German government selling. Obviously, the United States government has a lot more Bitcoin than this. We have Mt. Gox coming up, so a bunch of overhangs. The German government, you've actually been able to watch their wallet. You could go on Arkham. You can see that the wallet has come down a lot. So if we just roll over here, we see we're down to 1.6 billion. At the peak, we are at 3.5 billion. This is not in coins, I don't think. So this is just following probably the price of Bitcoin, but there's a lot of outflows. You can see the outflows almost daily. They're not really the best sellers from what it seems in terms of the execution. If you look at Bitcoin's price action, it's almost like whoever is selling is following some kind of basic momentum oscillator, right? And just selling when things get overbought on the 1 hour, the 30-minute chart. And we've just kind of seen that behavior all the way down. But it does seem like they're not trying to prioritize for, execution cost, fees, anything like that. Anything that you would think of with someone who's trading with a very significant amount of size like this. So this is, again, though, this is down a lot from where it was. They have 22,000 Bitcoin left. I forgot where this was at the peak. So that's probably something I should have remembered. Let's see, token balances history. Here we go. It's actually, that answers the first question about whether or not this is just following USD value. So 50K at peak down to, right, we're right down to, is this down to 40K? Holdings 20, so I don't know why that is. Anyway, you're seeing people, though, share images of, they're sharing images of inflows. So why there's inflows to this, from exchanges, I don't think that it is the German government buying. I just think that they send a certain amount, they're sending it to exchanges. Good thing they're also sending it to flow traders, which is, a market maker that's going to offload this hopefully in an orderly manner. But make no mistake, like OTC, anytime they're giving this over and they're not selling it directly at market themselves, if it's OTC and it's not some kind of auction or block trade, that might sit on someone might warehouse that temporarily, but that's still going to hit the market the same way you or I sell. Obviously they have more tools at their disposal, but it's still supply hitting the market. It might not be immediate, so you'll see that there'll be outflows and there won't be the corresponding volume for the exchanges they're sending to in that day. So for example, let's say you see 2K BTC sent to Kraken. You look at yesterday's Kraken volume, it's not even, it's not over 1.5K. Just giving you a brief example. It's like, all right, so they clearly didn't get to offload all of that. You can't imagine all the volume was them, obviously. But I think the inflows coming back to the wallets are just basically, all right, sending it to exchange, not offloading it, sending it back to the wallet, if orders weren't filled or the orders weren't completed. So that's worth keeping in mind. I think you want to pay attention to when these outflows are being shared, so when they're popping up, and then market impact overall. So when that begins to tail off, like when you see that, let's say over the last 7-day period, when 500 BTC was sent, however many hours ago, or in intervals, market moved down X percent, and now for the similar, maybe greater, even slightly less, the market is moving down a lot less or just responding a lot less negatively to that information. That could be a good sign that the market is starting to fade this, right? And this is starting to be, at least this supply is starting to be depressed and demand is either taking over or confidence is taking over again, because it's not necessarily the case that this is being sold right away. It's just that the market has a negative response to this, which, can basically exacerbate any moves to the downside if and when it is finally sold. So we obviously are very familiar with how reflexive this market can get because of, that important behavioral component. So inflows, that's good during all of this. And now let's get right into Bitcoin. So I have these on the high time frame charts. Why do I have them on the high time frame charts? Well, one, I'm not seeking clout by any means. But if you're listening on those sync code spaces, since April, I've been saying basically the market is going to be top for the summer and that you could basically piss off. Now, there's plenty of trading opportunities. Piss off is good for the dad, right? The family man, the person who wants to do other things over the summer. But piss off is maybe not the best idea for the person that is trying to make it, as a trader and doesn't have their stack yet and is hungry and, still sees that we have these wide ranges to trade, right? But there's a lot of reasons for that. Just everything lining up nicely for that. And lo and behold, we are lower than where we were, and the market has not really put in any kind of sign of that changing in the near future. The sign of it changing actually was in the direction that no one really wanted to see us move towards. So high time frame chart on BTC, because you could see that for 1, 2, 3, 4 last 4 months, we've been able to close within relatively the same range. So whether that is, 59, 60, I think 60 is a good level. And, the highs of 71 on a closing basis, that's your monthly chart. So the range is pretty clean, right? A very clean range, a very wide range. So there's plenty of trading opportunities. You had a couple big moves within there, but it's very easy for someone to spot. Like, you give this chart to a 5-year-old and say, hey, after teaching them maybe the basics of macro trends and macro intermediate trends and ranges or bracketed markets, or where's the trend, where's the range, it's very clear that here's your overhang, here's your major supply. This level has been bid going back again to March, and this is our trading range between 72 and roughly on a closing basis. That if we go off the first close, the first low close in this, going back to like 61, but I'd say the floor is between 59, 61, depending on what you use. Some people argue whether you're using weeklies, dailies, monthlies. It doesn't matter. The point is, all of that is almost all of that is encapsulated within this region, where all the activity took place. So inside of that, you got both sides adding to positions. You have longs, you have shorts, you have a bunch of periods with open interest rising and then crashing, and one side being squeezed, and market trading against positioning that accumulated at both sides, anticipating breakouts. But all throughout this, you have people also building spot positions. So while open interest might get washed a bunch of times, you do have a spot market that is picking up supply. You have people offloading, obviously keeping a lid on this. You had a bunch of positive news with regard to the ETF, and yet no advance in price. So there's a lot of signs. There was an indication that the market was absorbing this, that supply was dominant, that narratives maybe a little bit exhausted, and momentum was as well. Now the problem is we've broken to the downside. Monthly has not closed yet, right? Monthly hasn't closed to the downside, but this is a pretty convincing break so far. But again, you got 22 days left. I saw people arguing over whether or not, this is a weekly break in market structure. Again, I'm not going to fight over semantics or how you define that. I think most obviously it's clear that we've broken out of what has been the established range. And the problem with that is this is the first time that a very significant amount of the market, it could be offsides, right? Now it's very clear, this is the first time that it's very clear that of this range, right? If you imagine the start of this range here, or break of prior all-time high on a closing basis, that since this, that bears are in control, right? And that now, if there's any argument to be made, it's that if you just even considered 50-50 bulls bears in this in terms of positioning, even if all things were equal in terms of position sizing and where they tagged on, and where a position averaged about, which is relatively this 65 region, because we're looking at, now this is a quarterly VWAP, but if you had this as a rolling VWAP all the way back here, you could extend. If we had, like, for example, a volume profile of this structure, your POC kind of in the same region as last quarter's VWAP, right? So these are going to reset every quarter, but the fair value, the greatest amount of positioning, the greatest amount of volume transacted in that region, you're trading below that. It's clear that bears are in better position than bulls, or rather people that sold are in better position than people bought. The trouble is, it's likely that since we're not too far away from that, we are right now 12% away, that we're not, it's likely that you still have people that are holding on and are underwater. And now it's easier for the market to move down than up. It's easier for the market to move down than up now because you're definitely trading against a lot more positioning that would probably like to get out of break even and sort of, quote unquote, reevaluate things. And that cost basis is not very attractive up here. And again, we spent a long time up here. So you can make these kind of, it's not a very precise assumption, but it's assumption nevertheless that I think you can make with some degree of confidence, that a lot of positioning is built up here, and now that positioning is for the first time probably significantly offside, or at least starting to hold the rosary beads and start praying. Now, break to the downside implies outside of this range for me that is prioritized over, and there's a couple other things too you'll see on this. Let me clean this chart up. So I have the quarterly VWAPs, so that's like lining up with your POC of this entire range. So we're away from that. We're under the yearly VWAPs. And one thing I forgot to mention, which was actually one of my more important points when I was talking about this, and this is why you should write things down, is that this is for the first time we are below, and you'll see that on the bottom right hand corner of your screen, I have the IBIT level 2, because I'm not going to be looking at Bitcoin during this entire stream, but in the event that, IBIT's trading below 30 or we see things go crazy, I'll be able to notice it on that. And, I'll know obviously that means that Bitcoin is in trouble during the stream. Or, IBIT can start trading back above, it could trade back above 35 and maybe we're breaking upward. Either way, with regard to the ETF, this is the first time that since the advent of the ETF that most of the people that bought, if you're using some kind of anchored VWAP from the start of that trading, you can make a case for most of that holder base being underwater. Now, again, stronger hands, that theory is something that I talked about earlier, but it is something worth mentioning, right? Because when markets break down like this, it actually does become easier for them to move down, and it's more difficult for them to move up because, again, you do have those people that are like, hey, I'm below my break-even price. Let me get out. Let me reevaluate, and just sort of how you might behave if a trade got away from you and then came back to your entry point. It's most people are going to close that out. So another thing worth talking about on the high time frame is not only the yearly VWAP, again, sort of average risk level across the board. I think the longer you go out with VWAPs, it's not going to be as actionable, especially with something that trades on multiple exchanges. But again, something worth pointing out that we're trading below it, so it's never a good sign. It's just that consider where the average risk is located. So if you're trading below it, bears are in control. If you're trading above it, bulls are in control, and the other side is offsides. In a very derivative-led market, if open interest was much higher, I think this would be more significant, but we did see open interest come off a bit. But you'll see there's sort of this faint line on the chart that I should change the color of that. That's the 20-period moving average. This is, if you guys have been following me since the beginning, you'll know that I've talked about this line as the most important moving average for me. This is also, for those of you that have been following me for a while, the level that that I have to be in or have to be cautious or out around. So basic moving average, 20 period. If you're using some kind of standard deviation band tool like Bollinger Bands, this is your center line. A lot of other SD band tools use this as well as sort of that midpoint. You guys remember when I bought 25, I talked about the multitude of reasons I needed to, but more importantly is because we are back above this, and this is on the weekly chart. So historically, this has been pretty significant. At least, if anything, what you could take from this is when we've broken down from a range like this, or this is the first break outside of a multi-month range. You could fade it initially if you're fading it initially, it has to be on the very low time frames, and that's usually for some kind of, you're buying liquidations, right? You're buying where other people have their stops. You're buying where other people are forced sellers. There's a bunch of liquidity there. You're buying in the short term because in the short term, when you have those massive dislocations, it's actually much easier for the market to move back up for a short period of time. You create sort of a gap in the book. You create a big dislocation, and the market can move from, it can move a couple $1,000 and really with no effort. And that's often a good time to get involved on the long side if you have a move down very quickly, right? In the immediate moments after a big move down, a big break. In the middle, right, on the long term, I would say, yeah, this is probably going to look like a good dip to have bought if you have a multi-year plan. Midterm, it's a little bit more murky because you have, again, a multi-month range. This is the first break. This is a breakdown of this 20-period moving average. On the daily, this is useful as well. This is set up to be on the weekly, but this one is to match the chart. But you can see in the past, these have been good moving averages on the daily, on the weekly, as sort of a indication or a line in the sand, if anything, a dynamic line in the sand for who's in control. If anything, what this means to me is I don't have to rush, and that's why I said, fools rush in. I think there's a very slim chance that we're looking at an immediate recovery. So an immediate recovery is, to me, a slim chance, but I don't think it's impossible. So I'm not assigning, zero probability to it. Immediate recovery for me means basically we are trading back above these lows. So trading back within, and it doesn't, I'm not, I put it on the weekly right there, but back within the confines of this structure, right? Where most of the participation, where most of the positioning, and most of that battle had taken place. So if we're trading back within that, you send a very clear signal to the market, right? That no, this is not a real breakdown outside of a multi-month range, that all those other signs are, while they have been significant in the past, clearly they're not prescriptive of anything. If we're back above, for me, if we're back above like 60K firmly, and I don't mean like on an hourly chart, I'm talking like we have a daily close through there, or, it's just, we're rebid with a vengeance. If we're trading back above, and you could use this little consolidation for reference, if we're rebid that, I am probably as long as I can get. I think it would be very unlikely for us to, and it's sort of like if you're looking at this as multi-month value, you have a break outside of value. Fair value is around 65. If we're breaking above 60, we're holding 60. I think we're at least getting the midpoint. But in my opinion, if we have this multi-month range, breaks down, attempts to break down multiple times, finally does get that really clean move outside of it. And this is, again, take this with, along with some other details as well in terms of sentiment, in terms of positioning, in terms of seeing that, for example, there's a lot of overhang right now. The market is very fearful. If you have that and the market is rebid higher back within that, then that's all for nothing. And then I start really favoring the highs of this range, right? It's almost that simple to me. But almost that simple for me, I don't think that that's as likely as the scenario where we sort of fill out, like I said. I said that I don't think, the other day I posted and I bought back 20% of my short hedges that I had on 69K. And all this stuff, I've talked about this extensively. I took a couple long trades here and there between, literally, I think a couple, but was very transparent with getting out of those and those being tactical, but almost completely delta neutral since 69K. I do have upside exposure for the end of this month with Bitcoin and ETH options, and that's more along the lines of like a hedge in case we do get a big snap up, that I'm not, offsides from that, or I don't have some kind of exposure to that. But my interpretation of this break is not that necessarily this is going to lead to the next big trend down, but we have to deal with the next major pockets ahead of us. So filling out something like this, I don't think that we're going to look at much lower than 50 in the near future, but I can see a situation where we're filling this structure out. We're filling, rather, the lack of structure there out. So you could see basically these high volume nodes are my areas of interest. If you consider these carve outs, this is a very weak one. This is a very weak support. This is a very strong support, likely a very strong support. We spent a good amount of time trading there. The most bullish scenario, I still think, would be maybe a multi-week, multi-month correction here. So whether or not we get that remains to be seen, but I'm not considering outside of that until there's reason to believe that. So there's a couple people that are really, banging the doom gongs. Because in the past, a breakout like this has signified, along with some of those other indications I mentioned, that maybe we're looking at a real trend change. I don't think we're looking at that yet. I think that, again, Bitcoin it's in a bit of a different situation than prior cycles. Like this one is slightly different, right? Rhymes, not repeats, but I'm not completely under the impression right now that this thing has to do what it has done in the past, which is basically give back almost all the gains. So with Bitcoin, as I said, if we're back above 60, if we're back above that level, if we're trading back above, what the hell just happened to my, there we go. Hold on. If we're trading back above the, for example, it doesn't have to be, we don't have to be back above that 20 on the weekly, but if we're trading back above 60K, if we're trading back above, let me get rid of this because I should have just backed it up to get back to those things. For trading back above 60K, I think that's enough. Again, fair value is probably right around 65. If you're back above that, probably have a little bit more. It's probably a little bit more EV to base out above that. But I think that if you're back above 60, we're looking at a slingshot back towards the highs. What you're looking at down here is you're looking at the premium between Binance and Coinbase. So briefly, Coinbase traded a premium. It's been trading at a discount now since the beginning of this German selling. Will max long above 74K. Listen, there's a good reason that this was one of my really strong levels to make decisions around. Prior all-time high. I think, listen, you're joking around. Most people are joking around about the idea that someone might say, hey, I'm bid above, 70K, but that works, right? Now, yeah, you're implying you're waiting for that much of the market to move to confirm that, but on balance probabilities, it's very unlikely you have a triple top situation. And if you're back above this all-time high, that's why I said months ago, I am defensive below prior all-time high. I'm bullish above prior all-time high because it's just a really good contextual level. Buying all-time high breaks, buying acceptance through prior all-time highs after multi-year corrections is something that works across multiple markets, and especially in a market that moves on momentum. Commodities go through long periods of momentum. Bitcoin is obviously an asset that moves on a ton of momentum, so that works. But I think there's levels you can get involved much sooner. But for people that are really conservative and they're really risk averse, if you're someone who needs the utmost confidence, there is merit to that decision. Right now, in terms of just lower time frames, what we're seeing, we are still respecting VWAPs. If you look at session VWAPs, weekly VWAPs on the way down, like where you would expect market to step in again and offer this. So that's something worth noting. Open interest is still relatively elevated prior to these lows. So again, open interest it's longs and shorts. But the further you get away from where that open interest accumulated, the more you could say that you're putting pressure on one side than the other, over the other, especially whether it's up or down. So if you have positioning that accumulated within this 60K to 70K region, it's not entirely squeezed, and you're wondering, I wonder if we're getting a bunch of shorts building up or we're getting a bunch of longs building up. Well, it's both, and if you're below all of that, you could definitely make a case for whoever is still holding that long open interest or that short open interest. There's a person on the other side of that, whether or not it's a market maker with inventory or whether or not it's someone who's actually exposed to that, has some Delta 1 exposure to that. If it's below where that open interest accumulated, that positioning, it's a good case to be made. That positioning is still offside and yet to squeeze possibly. So for this entire range, you still have Bitcoin slightly elevated. If we're looking at Binance, from these local lows right here, not local, but going back to May. If you look at Binance open interest, it's still up. Now, you have to imagine that also, or you have to take into consideration that Athena is a good amount of the open interest across exchanges for these products. So that is something always worth keeping in the back of your mind, right? Now moving forward. I think it might be something like 30%, a third of the, basically same thing. Of the open interest across exchanges. Funding right now, relatively neutral. A decent amount of open interest added in the last 24 hours. Nothing that's jumping off the page. Again, 60K is my number. Otherwise, I could see us kind of continually stepping down in sort of I would say, hopefully an orderly fashion. It's been somewhat orderly so far. So if we could, have something similar to this back here where we chop down and corrected without having any kind of cascade, that'd be great. But keep in mind, just because local OI has been purged towards the lows, we're not there yet. You still have a bunch of positioning that's from prior moves on the way up. Obviously, they're much more favorable cost spaces, but it's not like this thing can't continue to trade against positioning, especially if spot keeps selling the way it is. So if you just look at the spot markets over the last couple of weeks, and again, there's a culprit for this. There's a reason for this. It's just been a ton of spot selling. So when that abates or when the market stops responding to that, then we'll know that we have a relatively decent signal to act off of. CME open interest is still high. Global open interest, if we look at just global open interest, that is this is Bitcoin totals. Again, like I said, it's even though we're lower than that low right here, open interest is still relatively elevated to that low. Global aggregated open interest excluding Bitcoin and Ethereum. That is at the lows going back to April. So that was the first big move down. We're back at that level. Alts have just been, I'll get into ETH in a second, but alts have just been absolutely hammered. So if we just look at maybe like the top 100 and just look at these things on the high time frame charts, I mean, there's a lot of alts. And so this is a question I had yesterday. I was asking a couple friends in the chat. During any prior bull market corrections, did we have situations where previously strong alts or alts that were able to perform well during, wealth effect periods or alt seasons, or, those rotations that we get for a couple weeks, did we have a situation where during Bitcoin and Ethereum's bull market corrections, alts make new lows? Or did we have a situation where certain alts did make new lows? And one of the things I was thinking of was, was actually DYDX. I had caught the DYDX chart. I'm looking at it. I'm thinking, wow, there were a lot of reasons to be bullish. If you're just taking a simple approach, thinking about DEXs in the past, Hyperliquid obviously took a ton of attention. But this was something that everybody talked about. You had multi-year range break to the upside. You had a bunch of signs that this should have, with a lot of other alts that obviously didn't perform as well because meme coins took a ton of attention. AI to some degree, real world assets still kind of dragging, but just shit the bed. And I'm looking at DYDX and I'm thinking, wow, this is about to make new lows. And it's really interesting because you have a lot of alts that are in similar situation. It's a sign that hopefully the market is getting away from just, actually what's happening is, one, we're still PvP. We don't have a ton of new retail, so everyone's kind of aware of how this game is played. And the interest in just bidding across the board is not really as much. It's not there anymore. And also it's the fact that, let's say how many times I could say, and also there's just too many coins right now. There's too many coins and not enough money to go around. So it's kind of the opposite of like what's his name? Howard Marks of Oak Tree Capital, hedge fund manager, put out a bunch of great books that are on my book list. But he talks about too much money chasing too few deals. This is like too little money chasing too many deals, right? So there's just way too many alts. There's not enough money. There's too much dilution. So hopefully the market gets back to bidding quality, but I think that you could anticipate the first sector to do well again when the market does well will be meme coins. But again, if you just look at all these alts, I mean, they're just atrocious. You have to put the log chart back on them. A lot of them are just returning back to their bear market lows, just completely giving up more than what you would expect during a bull market. So it's not a bull market for everybody, right? And that's kind of like, that's what a market is, right? If you're looking at the S&P, you're looking at 500 assets. There's a lot of things that are dead, right? And have been dead as a doornail for a while in the stock market. Doesn't mean everything goes up. I did see something recently though about there's a lot of assets that are above their 200-day moving average, and that should be an indication that there's not as much dispersion. But if you look at a 200-day moving average, you could be above it multiple times but be in a range. So it doesn't really mean that much. All right, so ETH. A couple things about ETH. The S1's filed. If you look down to low time frames, just go back, pull open ETH. ETH funding, trading relatively neutral. Nothing crazy. Good amount of OI added in the last 24 hours. Again, it's starting to slightly unwind, but this is where that S1 announcement came through. So just under 24 hours, just under a day ago. So we did have a move up. This was a small move up, about 5%. If you look at open interest, rise about roughly the same. So nothing crazy. It's not like, this people piled into the S1 and we have to wash them out. ETH looks better than Bitcoin. So ETH across the board, if we're using basically the same things that I mentioned earlier, it's below the 20, but it hasn't broken market structure in the same way that Bitcoin did. It's below longer term VWAP, so it's below quarterly VWAP. It's at the low end of the range, right? But it's still within the range. Now, a lot of activity took place down at this level, so it's not as clear that we're below where most of the activity took place, and you could say that, it was a much larger group of people off sides. It's not the same as the Bitcoin situation because you also don't have ETH. You don't have an ETH ETF trading yet. You don't have that holder base off sides. So you're still within the range. It's not as ugly. I think that, so my belief is, I closed out 20% of my hedges on BTC. I have a larger Bitcoin portfolio than anything else. I was mostly delta neutral, but I picked up some ETH. And the reason is, one, we're holding this structure. There's been, even during tops in the past. So back in 2000 and, maybe we could just look at the chart, but I'll try to go off memory. 2018, 2017, 2019, there was like a month where ETH ran up after Bitcoin, right? After Bitcoin had actually topped. Now, these are both off the highs. But I think the idea that if Bitcoin is able to stay stable, and I mean, like, if it doesn't shit the bed in the next week before the ETH ETFs get green lit, I think ETH's going to pump off of that. Now, just keeping this simple, you did have a decent amount of open interest added from this ETF move. So if you look at the range lows of the structure, so just in terms of, my belief is market trades against positioning, right? The market is just positions, as Michael Platt said. I share that quote a lot. Market likes to trade against positions. If markets like to trade against positions, this market fucking loves to trade against positions. So this is the ETF move that we completely engulfed. So obviously not bullish, but it just goes to show that if Bitcoin's shitting the bed, ETH is going to shit the bed at some point as well. So if we look at those lows where we're sitting above them now, this is like the 30th tap, right? Not the 30th tap, but you get the idea. We are still above in terms of open interest. We're still at a surplus of positioning, right? So just from, let's say, this move alone, market is trading a few points below that, maxed out. It traded 10 points below that, or 10% below that. And in terms of where we sit with relation to that from an OI standpoint, we are still 12% above, have a 12% rise in OI unaccounted for, or that is still in the system from the beginning of that move. Meanwhile, prices covered that move. So it's not crazy, right? But it wasn't completely wiped. You have, again, Athena is part of the open interest. You have people that are obviously hedging into this, thinking that it's sell the news, and you still should be sell the news into it. I look at this, and I don't want to sound overly simplistic about it, but is the ETF priced in? Well, here's the ETF move. Here we are now. Is it going to get worse before it gets better? No. I think that, again, just my opinion, I think that we could trade up to, if you just look at where the market has been spending time, where the market is consolidated, and where the gaps are. Here's a gap, right? Here's somewhat of a gap in terms of areas where the market moved relatively, this was, I would say, less assisted than this. Like there's a little bit more of a grind here, but without much resistance. Like we didn't establish any kind of structure, and you would call these moves like inefficiencies or just pockets. This is a little bit different, like I said. And you could look at this covered very quickly, and just looking at time-based candles, you could tell this is our 8 hours of coverage, and this is, however many days. But not much structure in the way. So I think that into the ETF, I think you get something that pops up. And this reminds me of the Bitcoin structure that I was talking about when I was talking about the reason why I was bearish at 63. So I think into the ETF, we get this pop up. I think if Bitcoin is going to continue to correct over the coming months, though, and if we're looking at, again, what you anticipate after a range break, which is more time lower than higher, I think ETF could lead to something like this. But then ETH, let's say, I said the other day, I think ETH can like pump 10% off an ETF. So that puts us right around there, right? I said, I think we're going to have a 10% pump and then sell off. And I said this on the spaces. I think you do get something like that. And I could see a situation where it's very unlikely that levels like this are just left. In better conditions in the beginning of the year, I could believe it. With the Bitcoin ETF, I could believe it that a level like that would get left behind. But in these conditions, I feel like these are just begging to get ran. So sort of something like Solana did in the beginning of the year. So open interest still up. Again, I think this is going to be a pump before we have a further correction. Unless if Bitcoin's above 60K, then I don't think we're going to get that, right? Bitcoin's above 60K. I think you're just dealing with, a very wide range of possibilities for ETH. Bitcoin trades above 60K. ETH gets that ETF announcement and then is basing out above 33. Then yeah, I'm playing it just like this wide range, and still playing, a quote unquote level to level. But it's just not playing level to level for points. These are very big moves ahead. But that's if Bitcoin does that in the near future. My belief is that ETF pump, correction, something like this, and then, correct into September and then up out October. My whole thing was always come back after Labor Day. Now, what I said was, I think this kind of sets up similar to what Solana did in the beginning of the year in a much shorter period of time. Solana in the beginning of the year, and I think it kind of does the same thing again, is Solana in the beginning of the year, when I said January, I was talking about this structure. It was a bullish structure, flagging, okay, after a big move, big break up. And then before moving upward, it took out these very obvious lows, right? So you had this sort of situation where you had volatility funnel, positioning building up. Market likes to trade against positioning, punish, and then continue. And I think that if this is happening in the beginning of the year when things are really bullish, I think it's more likely that we see this, around this time of the year in the summer. And I guess the same thing, I was talking about that for ETH, just highlighting these lows and how obvious they are and where we sit in terms of just the calendar. And with there's no major events on the horizon or reasons why this market should mark up from a narrative standpoint. We're not closer to the elections yet. We don't have an injection of liquidity in the market. I think that you could make a case for the stock market cycles, which I think are 60 to 90 days, us looking at maybe coming into a corrective period, which would be fine. But I don't think that bodes well for risk assets in general. We've had downside correlation, not upside correlation. So that stands out. But long into the ETF, I think you could sell the ETF. That's my personal opinion. Again, not financial advice. So let's get to Solana, though. Solana, I'm seeing everybody talk about how bullish Solana is. Solana is so bullish. Look at Solana holding up. I think that what you're doing is just building up more longs that are eventually going to get ran because, again, talking about ETH and BTC and how the market, I think, is going to behave now that the leader, sort of the representative of this entire market, which I think is Bitcoin, has broken outside of the range. And I think because of that caution, because of the increased likelihood that it chops a little bit more before going up again, I don't think Solana escapes that. So I do think Solana is kind of going to do a larger version of what it did in the past, which is when you had this volatility funnel, this very large funnel forming, and you had these slightly higher lows forming. It sets up for that shock, scary move down before up again. And you see this happen all the time, right? Where you see these lows accumulating. This is an easy long to walk into. So if you're going to walk into the easy long, you have to deal with that choppy environment, right? But then you also, I think, if you're willing to step in when it seems easy, you have to expect that right hook that's going to come at some point. If you are willing to step in at the best time, it's often the worst. The best opportunity is the one that's the most painful, and that's the one no one wants to step in front of, right? And that is like getting, that is deciding to go out sailing on a really shitty day, rather than getting involved here, which is, it's calm, right? I mean, it's not, we have a lot of chop, but there's no, people who are holding Solana have not been worried, have not been really shaken. So I think we get that just because of how the market has been unfolding. If you look at Solana open interest, it is going back to the beginning of this move up. It's kind of flat. So it's not like there's anything really that's building and standing out as reason to be overly concerned. If we go to Solana and just look at Solana open interest funding, all of that jazz, everything has been trading positive. So one thing that's worth noting is, again, prior cycle lows, we've had periods of backwardation. I don't know if you're necessarily going to get backwardation, but we've had periods of sustained negative funding on the daily. We haven't had that yet. We have not had that on the high time frame yet, where it's lasting for a period of days. If we just go to Bitcoin and we look at Bitcoin's funding, look at global funding, it's been collapsing to some degree, but we haven't had periods of really any red. So if we go back to prior cycles, you can see aggregated funding rate, global average is low. But we're still, it's, again, back to my earlier point, like this is the beginning of a breakdown from a multi-month range. Can we get right back in it? Yes, but it's the first week that we broke down, right? There's no one's going to debate that. So Solana, I think it looks good right now, but I think that it's going to end up taking these lows. But that leads me into my next point about it. I don't think you want to get overly bearish on Solana. Or maybe even for people who, I should say this, I know a lot of people who bought 120, the 120s, right? So between 120, 130 region. And if you think about what I'm saying, and I'm saying that, hey, it's going to cascade through that and recover, and you're looking at maybe a 20% move down, buying $100 Solana would look great to anybody. Holding out for that might be dangerous because, again, there's a lot of things can happen. And also, the Solana ETF is going to come at some point. The deadline lines up with a major unlock. And that is something that I think that a lot of times, this market does things that are, let's say, they are unscrupulous, right? And part of that would probably be entities making sure that Solana pumps into that event so people can offload at better prices. So if you ask me where I think the best, I guess, answer is, or best way I could put this, is do I think Solana is going to be higher at the end of this year or lower than this number? I think due to that alone, I think that it's going to be higher. So I want to sell before that. But, obviously, I'm not saying I want to sell right now like I'm going to sell. But the point is, if I was forced to take a trade right now in Solana, long, short, flat, timeline, I would want to be long from here into at least, let's say, January, February. All right. So that is something worth pointing out. ALTS as a whole, we already went over them. Everything is pretty much has shit the bed. It's a weird cycle because we have a cycle now with products outside of this market that are going to become more popular that I think will make this market trade more differently than it has in the past. I think you could expect this market's going to be more efficient, but not efficient, but more mature rather, and trade more like traditional markets in that there's going to be dispersion. Not everything is going to rise together. We don't have a bunch of new retail in this market yet. I don't know what brings new retail in. Maybe it's a major application, a major breakthrough. Maybe it's Bitcoin breaking above 100K. Maybe that needs to be it, because it certainly wasn't just Bitcoin breaking above all-time highs. But so far, it's just we have not seen any kind of sign of that. Of course, we have new retail that's come into the market, but it's not like prior booms, where it's a mania. But also, that's using the last beginning as a reference, and that was during COVID, where, again, that was a completely crazy situation. Even though market does have 4-year cycles in terms of liquidity, that was a weird situation, liquidity, where people were giving money directly to their bank accounts. So I shouldn't say that's weird, but that was rather unique. I still think that RWAs are going to have their day in the sun. It's something you've heard Larry Fink talk about. It's a literally a real world asset, right? You can imagine that that's going to be applied, and that's going to be something that we see TradFi integrate more and more and use blockchains and use maybe these things that take advantage of the fact that our settlements are much more advantageous than theirs, or integrate with us. It allows them to utilize blockchains. I'm fucking like losing it right now. My mouth is getting dry. Anyway, but RWAs are I think it's a narrative that hasn't gotten enough love, and I think it eventually will. AI, same thing. I think we're early to that bubble. AI performance has been really lackluster. One last thing I'll point out before ending this stream is we were talking about this in a chat the other day. I would keep an eye on, another thing before I get to the other point. Solana and Solana meme coins have kind of an inverse relationship until we have a new major leg up, new money coming in, and people are less, nervous and cautious than they are now. What you see is like if Solana goes up, it's at the expense of WIF and some of the other Solana meme coins. And that's something worth noting. Like if Solana is going to continue to go down, you'll see little pumps in Solana meme coins, but I don't think that I want to have the same exposure to them. They've underperformed Solana over the last quarter. So, for anyone who's been trying to acquire beta relative to Solana, that has not worked. So this is something that I think is worth noting, because I'd rather own Solana than Solana meme coins at this point. They pump due to just being less liquid, brief periods of positioning being ran through. But it's very much a case now where one is borrowing from the other in order to perform well, right? So if WIF is up on the day, Solana has been down or stable. If Solana is up over the coming days, it's at the expense of Solana meme coins. I won't get into all the other shit that's going on with meme coins and celebrity stuff, yada, yada, yada. But last thing I did want to point out was there's a lot of coins that are approaching levels that you probably will see bid. And that is the $1 level. We were talking about this the other day in a chat. And that is actually GCR who brought this up. So there's a couple things. OP, I pointed this out. FET, so FET, what else? WIF is one of them. Just go through all of the alts, right? Anything that's been somewhat relevant over the last cycle, and see what is relatively close to $1. So again, like I said, for memes, WIF, I think WIF is going to continue lower. I doubt these lows hold. Again, it's performing well at the expense of Solana, but it's a situation now where I think one is borrowed from the other. I don't know if this is going to get to $1, but I think it'll probably get close. So that's something that I would love to buy that as close to $1 as possible. WIF, what other ones were there? There's a couple of the ones that stood out. What I say? I said FET, Wild. So it's an AI play. Where is that? That is right now at 184. I could see this trading back down towards $1. The point is that number is an area where you're likely to see people bid. Very lazy number, very obvious round number. And again, I'm off the top of my head, I can't remember which other ones there were. I just have one of my watch lists here. Did I say FET too? Yeah, FET is at 118. If these get to $1, I think you could see at least, I said a guaranteed 20% pump the other day in chat, and people were like, "No, you're gonna get like 50% pumps." But if FET hits $1, I'll buy FET there. Wild hits $1, WIF absolutely. Just something worth noting because of how this market tends to behave around certain numbers, whether it's $1, whether it's 10, whether it's 100. Again, just one of the idiosyncrasies. I think that covers everything. I don't think that didn't have any things written down, but I think I covered everything. Just look through the chat real quick. I don't think I'm going to take questions, but because there seems to be a lot. I just wanted to hop on here and get back on here again for the first time in a while. Is that everything? Let's see. Where's the stock market at? Up, up, up and away. So as I said, I was talking about like 60 to 90 day cycles. I think if we see a correction in the stock market, and when I say correction, I'm not talking like a doomer and talking about a reversal, right? I just mean the healthy moves on the way up that we have, right? That keep the trend nice and healthy and not overextended. If we get that, like imagine we're at 58 and we come back down, we just have this, month correction, which again is healthy in how this market moves over time. Does Bitcoin do crypto? Does crypto as a whole? I think ALTS probably hammered at this point, but does Bitcoin, I guess more specifically in ETH, do they hold up, or do they continue to chop lower? I don't know. Remains to be seen, but that's something worth noting because I think we are probably looking at one of those soon. Not making bets, though, on the stock market dropping because I'd rather just be long ETFs and not bother with that. And yeah, I think that's it. I hope you guys have a fantastic evening. I'm going to make a plan for how I do the 10 to 15 minute long videos, whether I do those and post them at night, or whether I post them in the morning, or maybe posting at night covering the session and just keep them basic levels I'm looking at, 3 to 4 assets, maybe touching on one current event, and then keeping it very short, just experimenting with different types of content. And yeah, I think that's it. Hope you guys have a good week. Remember, the CPI is on Thursday, so that will probably have an effect on the markets, at least temporarily. You know how that works. Until then, take care.